Hello and welcome. It's Friday morning and there's and a long weekend ahead. Of course, we're not going to go away because we've got to go out and vote. I do understand that. But what a U-turn. I don't even know what to say. I mean, the last hour of trade, forget 22,300. That got taken out like a breeze. But all the way to 22,400, higher highs on the Nifty weekly expiry, above average volumes in the F&O space, and I am not attributing this to global cues, no matter what both of you say.
No, it's not. It's not global cues. It's short covering, and it's one number, isn't it? 66.9%.
Yeah, I mean, so it's very coincidental, right? You think of the timing, and Tamanna spoke about it on the closing show yesterday. That look at this number; it's very high. Markets turned around. So very, very coincidental. It happened just about the same time.
Was it coincidence?
No, you could argue that maybe that's the reason. Since we do not know the exact reason, but you could argue that this is the reason.
I was tracking it on the X handle of the Election Commission of India, that notification and that post of the average voter turnout of the first four phases came at 116. And if you look at the Nifty intraday chart, the upswing starts at about 230, 220 odd. So I don't know if it's related, but the fact is that it did change market sentiment, and then coupled with short covering, you saw a domino effect on an expiry day. People suddenly realized that the mood has changed. There's 1 hour of trade left, and that perhaps explains what we saw.
But I think, I don't know how many people would have made money in that market yesterday, because till 12 o'clock it looks so weak. So if you took a stand and went short, you would have lost. It would take enormous amount of bravery to go long ahead of a long weekend as well, so keeping so much uncertainty.
Maybe trend guys who just saw this bout of short covering.
Multi-year growth story of India. Bet big on it.
But yesterday was entirely short.
It was, and it was a tough market to play. But having said that, I think as we go into today, it's going to be no easier. You've got this big event. I mean, you've got Monday as well. There's a lot of uncertainty around, not just elections, globally as well, I'd imagine. So while you may see a little bit of an uptick, I don't know. I'm not going to stick my head out this morning and say anything, but
the only thing I had thought I'll say it on trade setup, but just since we are on the topic, just very quickly, think of it this way, that yesterday the bravest of bears would have gotten a second thought. Considering that we have one more day of trade versus the global markets, I think it will take a very brave soul to have a large short position going into close today.
No, I think they'll be covering.
So that's
and yes, you have Saturday as well coming in. You have a special session on Saturday. You have polling on Monday with phase 5. So too many factors. I would say you can still expect some volatility today. It's not one clear direction. But having said that, let's lay out what the global cues are looking like this morning. And new highs for all US indices, after which they did retrace. So the Dow, for example, hit your 40,000 levels for the first time. At the end of it, though, the Dow, S&P and NASDAQ were marginally in the red. Nothing alarming, but, lost a bit of steam there. Dow futures, as you're seeing, is absolutely flat. So no clear cues coming out from there. Jobless data did come in on lines, what was expected, which was from the May 11th week. So the estimates and what it came down to fell about 10,000 and completely in line. So no big shakes over there. Bonds have also been behaving themselves largely. So 4.36 on the US 10-year continues. Crude is in that push and pull. So despite Middle East tensions, despite Canadian wildfires, which also could impact supply, the question mark on what crude demand is going to look like through this year continues. So you had Brent, for example, around your 83 mark as well. Asia turns out to be fairly mixed this morning. The Japan GDP contraction was a little more than what was expected annually, and that's a downside. That's why perhaps you're seeing the Nikkei not performing too well, about 0.5% down. So no positive cues, no very clearly positive cues coming in from Asia. The implied open in India also shows that you will start in the green, but not by a great margin, just about 22 points up, as per the implied open right now. And if you look at yesterday, and I found this interesting because, if with all the conversation we've been having here as well, what has led to that short covering? Who came in and bought in at the last minute? Where did that bump in come from? Look at that intraday chart of the Nifty. It's actually telling you about the astonishing move right in the last 1 hour, 40 minutes or so, where it really grows sharply. But just pull up the fund flows and take a look at those. So 11th day straight of FII selling all of May, actually, 776 crores. So the quantum not that high as what we've been seeing all of these days. DIs continue to buy. That has been a steady ship. So at the end of the day, a mix of factors which has led to that up move. You could argue it is in the EC data. Maybe it's elections, maybe it's not. The Satta Bazaar, whose numbers keep changing. Does it matter? Does it not? I mean, you don't know. The fact is, you don't know anything till June 4th.
Yeah.
But nevertheless, people come in every day and have a different theory.
Yeah. But yeah, I mean, like we said, maybe this is just such a strong coincidence and a strong reason why the markets could have done what it done. But what it did was just some data here. So the trade setup for the day today, the close was above the 50 and the 20-day simple moving averages, which is a very big positive for most day traders. And this could well help the sentiment per se. Remember, I mean, just the way it went up yesterday showed that it helped the bulls and didn't help the bears per se. FIs still, I mean, as of until 2 p.m. and when dealing rooms were spoken to, like, FIs did have large short positioning. Some of it, even if it got covered, the FI short positioning still exists, and it could propel the indices further if it comes in for a bit of covering. You know, yesterday Agam was doing this segment at 8:30, and he spoke about how even the 22,000 strike has for the June 6 expiry has fairly large calls written. If the market stays higher, the puts are okay. But for the calls being written at that strike, at some point of time, they'll have to cover. And, you know, all of that, you know, it might lead to it. Samina has spoken about how 22,500, 22,600 have large calls written as well. If the markets were to move higher, even those could come in for a bit of covering. So the FI positioning by and large, I'm not saying everything is FI positioning out there, but FI positioning on the short side is still very large as per notes that I've read. And therefore, if they get covered, then that could propel indices. And amongst the spaces, I mean, yesterday almost everything did well. But I think if you just look at the texture of buying that came in, one, into real estate, extremely strong buying, and two, some of these MNC Capex beneficiaries, we'll talk about some of them on the Reuters cut today as well, but these MNC Capex beneficiaries, yesterday you had SKF, Schaeffler, Timken, ABB, Honeywell, just the kind of moves that some of these stocks are making despite being so expensive tells you that the market is really favoring some of these names, maybe because of better moats, maybe because of earnings growth, maybe because of the delivery that they have done. ABB gained 10% ahead of the numbers, gained 11% on the day after the numbers, and yesterday added another 2% to itself. Just shows that there is just continuous buying that is happening into some of these. Guys, I was just, you know, one last piece. I was looking at the YTD gainers in India. The likes of Siemens, ABB, so Siemens in particular, 98% YTD returns. ABB about 87%. The likes of SKF as well have just done so well. Somehow the market loves this MNC Capex beneficiaries. Won't be surprised if these guys continue to do well. And today's numbers are exciting. There is a fair degree of PSU flavor. There is SCI, RVNL, NHPC. There is Astral. There is real estate in Phoenix Mills and Soba. There is Amber Enterprises, especially after what Dixon has done. Key to see what Amber does. And amongst the large boys, JSW Steel. So pretty packed day for results as well.
Yeah, just, you know, we came across this report by ICSA Securities on the India Strategy Report. And I'm going to quote what the analyst has said. He said that FPI flows have turned negative this calendar year to date by $2.2 billion, which we all know, right? But sectoral flows till April 24 paint a skewed picture for FPI flows rather than a typical risk-off environment-led selling, largely indicating that domestic consumption story is actually seeing some buying from FPIs. They've been selling private banks, but they've been buying PSU banks. And of course, amongst all this, FPI holding in Indian markets continues to remain at a decadal low. But having said that, it's interesting because it's not a typical risk-off trade from FPIs. Select buying is still taking place, even though the frontline number doesn't look too promising at this stage. They've also, of course, talked about how there are sectors where FPIs are overweight. We'll talk about this in a little more detail with our analyst on the show as well. But that largely stood out for me, right? So it's not a basket sell case on India currently. Also, you have 2.5 lakh contracts were a net short on index futures by FIs in yesterday's trade. Two things that stood out for me was the PCR ratios improved from 0.91 to 1.19, indicating that the texture of the market looks a little more bullish this morning than it did maybe over the last few days. And your VIX has eased off. It still remains at levels of 20, which is elevated, as bulls largely will see comfort once it comes down to levels of 15 or 16. But there was a decline on the VIX in yesterday's day of trade. So not too much, but 1.5% off on India VIX. Well, today is expected to be a morning of consolidation, nothing much to take over from global cues. It's going to be largely local, but 22,452 is what the implied Nifty is indicating too. Tough chance that we will take out 22,500 in a jiffy, but who's to tell what happens through the day locally. Well, it's going to be about earnings reaction as well. So while you had the likes of HAL, which we'll talk about in a minute, which literally reflected or looked exactly like the index in trade yesterday, flat for most part of the day, going home with 11% rally. Post earnings, post EC comments, I'm not sure what you can attribute that. Very sharp.
Earnings were fantastic. HL numbers were really, really strong.
Yeah.
Shouldn't that all be in the price by now? The stock has been on a one-way journey, non-stop.
But that's what people said about ABB.
Or Cochin Shipyard, actually.
Or
yeah.
M&M.
Yeah.
M&M also post the numbers. Actually, not just post the numbers, post the commentary from the management really had an uptick. But yeah, you could argue it is a whole host of factors.
And of course, you've had every brokerage sticking their neck out and saying that HAL, PDL remain aggressive buy calls, keeping the defense space in mind. And that is the theme. That's been the theme when it's talked about elections. So you've seen fertilizers, you've seen stocks in the defense, railway pack do really well over the last 6 weeks. But in terms of earnings, you had Biocon reported numbers. Numbers were largely flat. On top line, you saw a small growth of 3.9%. Nothing much to write home about. Net profit, that number on the face of it may look very disappointing. But remember, there was an exceptional item. And that's because of that, you're seeing a big cut in net profit. What you want to remember is their core business continues to remain stable. So if you keep that exceptional item out, the numbers are largely flat. Margins have seen a decline like every other API player. We saw that with granules yesterday. Biocon as well this morning. China dumping, pricing pressure has meant that API margins have been, pricing in the API space has been on the downward journey, which is very reflective in the kind of margins Biocon has pulled out as well. Some of the few things that stood out is that they said Capex would taper going ahead. So you want to keep that in mind. Biosimilar continues to look strong for Biocon. And they've also said that FY25 will be a growth year. So they will continue to do well, and the hope is that it's a year of consolidation as well for the company. I saw one brokerage report, which is Motilal. They've maintained a neutral on Biocon. They've said that despite a year-on-year growth in EBITDA, the PAT decline due to higher tax outgo is something that they're not too pleased about, and they maintain a neutral, saying the valuations factor in any upside to earnings in FY25. So that is Biocon. I'm still not certain how the street is going to read into these numbers, but I guess as we go into 9:15, we'll get a better sense of the reaction on this one. Vodafone Idea, I think our reporter did say that a number of analysts are saying that Vodafone is finally out of the ICU but still in the general ward. So while those numbers look flat as a pancake, there is no change on the upside or downside. But the good news is that they haven't done worse than expected, and that could be some relief coming in for Vodafone Idea. Revenues were flat, EBITDA was flat, margins were flat. They reported a net loss, but that's because the previous quarter, in the same quarter last year, there was an exceptional item. So again, core business looks flat for them. They've talked about expansion plans, their Capex, and that number talking to banks, we believe, to raise some more debt. Remember, they're sitting on 20,000 crores already raised last month. All of that will go into that 50,000 crore debt Capex plan that they've lined up over the next couple of years. So
just to add to this, from the ICU to the general ward, when you hit rock bottom, there's only one way to go.
It's up, you go.
Is up. So maybe all things considered, Vodafone Idea won't be seen as that
So sometimes it's good. It's good to have very low expectations in life. There's only one way to go, like she said, right?
Yeah, and maybe for Vodafone, the things start materially improving only after a couple of quarters. Right now, it's very difficult to show that. Maybe at some point of time when that 45% 2G subscribers move to 4G, some of them, that's when the numbers start showing.
So 4G subscriber base has grown. It's grown very minusculely, but of course the overall subscriber base continues to shrink, right? So I think in this case, low expectations. The good news is they haven't done worse than the previous quarter, and that's what the street may take some heart from. Another good one. This is a good set of numbers. I think Endurance Tech revenue was up 20%. EBITDA has also jumped up substantially, nearly 37% jump on Endurance Tech's EBITDA. Margins have improved quite well, 14.5 versus 12.8. Net profit is also up 54%. They've had some significant order wins as well. The board has approved an investment of 400 odd crores. Their Europe business EBITDA margins were beautiful actually, coming in at 17.8 versus 14.9. Their order book looks extremely healthy. Revenue share by motorcycles and exports is a good sort of sweet spot. So I think Endurance could see a little bit of an uptick in trade, largely because on every parameter it's a beat. And if you look beyond the frontline numbers, business is looking good for Endurance Tech.
So it's a good set of numbers there for Endurance Tech, not so much for Prince Pipes. That's the one that I wanted to talk about. They've missed estimates on profits. You have to also put into perspective that base effect, because of a good quarter last year, is seen some of the impact on the earnings estimates for Prince Pipes. So revenue down 12%, EBITDA was up about 9%, margins up 238 bips. But overall, I would say it was a muted quarter. High base effect is one impact. They've said they're going to increase Capex, so that will be seen. This Nuvama note on it says they still have a buy with a target price of 737. And some impact of their acquisition also will be felt, which was valued at 55 crore with a revenue potential of 100 to 120 crores at a 13 to 15% margin. There will be no significant earnings from that asset right now. You would say it's a flattish Q4 overall. Considering that Prince Pipes is up about 9%, I wouldn't see too much action on it today. Dixon is the other one I wanted to talk about. Dixon, after its numbers, also in focus, they've signed an MOU with Acer Pure for manufacture of consumer appliance products. That should be on your radar. And Garden Reach Shipbuilders. This stock, just because this entire segment has been in focus over the last few days, and also in focus for a variety of reasons. Now, if you want to build a list of stocks in election play context, then shipbuilders and defense pack and all of that definitely comes in. So the company has received a $16.5 million order from Bangladesh for procurement of their trailing suction hopper dredger with spare parts. So, okay, a decent size order. You might see some impact on this stock as well. Quite a few more, but I'll come to it in a bit.
Long list of results as well. But I'll start with PB Fintech because there is a block deal there. So $126 million worth of sell down to happen today. The floor price of the deal is at 1258 rupees per share, which is about a 6% discount. Now remember, the stock has gained ahead of that. We might well see a bit of a pullback in this one. In the case of Cipla, viewers, though, remember, the stock was down ahead of the promoters selling. And then when the selling got absorbed, well, the stock had a big rally. Not quite sure if the same happens with PB Fintech, but a 6% discount is not ordinary. You might well see this stock starting off slightly lower. If it gets absorbed well, then that might get covered. But yeah, be mindful of PB Fintech. If it starts off lower, you know why it's starting off lower. Move on to results, and a couple of them. Now, Sangvi Movers, the results were in line, largely in line. So no big changes. But the employee costs for the company were up 123%. And the reason why this happened is because the commission to directors increased from 1.5% of net profit to 3.5% of net profit. That's a large uptake in commission to directors. It's not something that minority investors take very well. The whole con call was around this, or you could argue almost the whole con call was around this. There apparently were no satisfactory answers. We'll of course try and get the management to come on air and talk about this. But if Sangvi Movers starts off lower, you should know why. There's already a bit of a downtick that has happened on account of this. Let's just wait and watch if there is more in store. The other one is Keynes Tech. Very good set of numbers, much like Endurance, but a completely different set of business. But remember, at times when the EMS businesses aren't necessarily all of them delivering, Keynes has delivered on almost all counts. So revenue is up 74% at 637 versus estimates of 608. So that's largely in line, maybe slightly higher. God bless you, Samina. Margins at 14.9% versus Bloomberg estimate of 14.8%. So they have maintained those margins. And PAT, as a result of which, up 97% at 81 crores versus estimates of 64 crores. Now, Keynes is a very expensive stock, viewers, and therefore it needs to deliver. But the fact remains that it has delivered on these numbers, and therefore very likely that the stock may be sanguine today. So prospects may be sanguine today. So watch out for this one.
Niraj, and Keynes, while they've reported a profit consistently, they've been a good, consistent performer, right? The stock hasn't done too well. And I think more importantly, they don't pay out dividends. I'm not sure whether that could be one reason why you see the stock not keeping up with the quarterly performance of Keynes as compared to some of its industry peers.
Yeah, but large capex on the anvil, so difficult maybe do that too. But yeah,
and low return on equity. I think 12.9, 13 is what their return on equity has been in the last 3 years. So
okay. I'm not aware of that, but at least the reported numbers, Samina, thus far,
are looking
really
really
quarter
good,
four,
right?
and related to estimates
solid,
as well, looked okay.
Just a couple of others that I wanted to talk about. Infosys is one. Remember, the entire IT pack was pretty decent yesterday of what was happening in the US and Fed rate cut hopes. That might not carry on in today's trade, but Infosys, because of this pack with Telstra for AI-led engineering transformation, I thought that was an interesting announcement, and that's the big theme, isn't it? And that's a conversation you've also been having, Niraj, about how prepared our IT companies are for AI. If anything, your top three will be at the forefront of that list. So Infosys one to watch out for. Just one more set of numbers. Restaurant Brands Asia, I thought was interesting. Their revenues and their EBITDA is looking decent when you look at their numbers. Margins have also gone up. Net losses, though, have deepened, 92 crores versus loss of 80 crores. That's anyway a tough business and space to be in. So that's one to watch. And of course, all the numbers today that you were talking about.
Also, Crompton, I think. Did you talk to the management of Crompton? I think
no, not as yet. But sorry, just a couple.
Go on.
Just a couple of numbers which will react negatively today. So Avalon Tech revenues were down 20%, 217 versus Bloomberg estimate of 229. Margins halved from 15.1 to 7.9 versus estimates of 9.4, and PAT down 69%. At 7 crores versus the Bloomberg estimate of 10.22 crores. Avalon Tech will see a corrective move. KIMS, Krishna Institute of Medical Sciences, revenues were up 10%, but PAT was down 27%. Margins at 25.1 were lower than the Bloomberg estimate as well. So suffice to say, this is the other one that could see a corrective move. And two stocks which might have a good move today, guys. One is Triveni Turbines, revenue up 29%, margins at 19.6, and PAT up 37%. At 76 crores, almost meeting estimates, but good number, right? 37% uptick in PAT is a good number. So this one could react positively. And lastly, Indoco Remedies. The US FDA successfully completed the inspection of a couple of facilities and concluded with 0 Form 483 observations. This is music to the ears to any pharma company may react. So watch out for this one.
Just a few negative ones to add to that list is JK Paper.
Yeah,
I mean,
big numbers.
It's a done business, I know, and every quarter I feel really sorry, but the numbers just keep getting worse. Revenues were down. Margins have seen a big beat, big downward reporting, 400 bips down on margins, and net profit was marginally higher. But then again, JK Paper numbers didn't look good. E-Clerks, I don't know whether you guys mentioned E-Clerks, but their numbers also were flat. EBITDA was down, profits were down, margins have also shrunk by about 200 bips to come in at 21 versus 23.1. Crompton reported numbers, revenues were up, they've done a dividend, margins have reduced about 150 basis points to come in at 10.4. EBITDA was down and net profit was flat, so Crompton could have it quite rough as well. Small company again, relatively in the mid-cap space, is Ratnamani Metals. There too, the numbers were extremely weak. Revenue has been flat to slightly lower. Margins have declined substantially to 16 versus 20, and net profit was also flat. Avalon Tech, I believe we've already talked about. Those numbers also are going to see a bad hit. So to add to Niraj's list, JK Paper, E-Clerks, Crompton, Ratnamani are the few other ones that would react negatively in early trade.
Yeah. So, well, those are a few names to watch out for. But, we'll talk about names and stocks which are gaining quite substantially on today's editor's cut. Isn't it, Alex?
Absolutely. In fact, we're talking about three of them, ABB, Siemens and Honeywell Automation, which I must admit, I was very surprised at the price chart intraday yesterday. Supposedly 5 times the average traded volume, and this is a stock that is above 50,000 rupees. It ended with gains of over 6-7%. Quite substantial.
Intraday was up about 17% as well.
It's crazy. But you know what struck me while I was looking at Siemens India or Siemens Limited versus Siemens AG? Siemens Limited, the year-to-date performance 2024, it's up 75%, whereas Siemens AG is up just about 4%. I don't know what that says about the India stock market.
Well, I think one of the global companies went out and sold a large stake, right? Because they said that, hey, we're just getting this arbitrage. Look at our valuations. Look at the India subsidiary valuations. Was it Novartis, if I'm not wrong? They sold off 24% stake. I think it was Novartis, but I may be wrong. But one of the global
But we're
names,
talking about automation, right? We're talking about automation companies.
Yeah, so make this quick. I mean, yesterday, one trait, and we were talking about it in the trade setup as well, that some of the MNC Capex beneficiaries, automation companies did really well. I mean, that whole pack did really well. So the ball bearing companies, you look at SKF, Timken, Schaeffler did very well. ABB, 9% ahead of numbers, 10% post the numbers, another 2% yesterday.
Yep.
These are egregiously expensive valuations, but the street loves these stocks. They can't get enough of it. And we have experts coming on air and talking about how they are very happy buying these stocks because there is supposedly a moat. Now, here's some reasons, Alex, and let's debate this. We'll make this quick, but let's debate this.
Yeah.
So I was, what is it that these companies have done, right? So for all of ABB, Siemens and Honeywell Automation, in that order, the numbers have looked fabulous in quarter 4. ABB was probably the best.
Yeah.
Siemens comes in a close second. Not quite an ABB, but still good. Honeywell, not quite a Siemens, but still good. Let's put it that way. So those are the kind of numbers that they've done in. Pretty even Stevens on the margin.
And outlook has been fantastic as well.
Most importantly, that, Alex.
Right.
So there are two things out here, right? One, look at the margin trajectory for an ABB, right? And we have that trajectory up on the screen.
Yes.
In Q1 FY23, they were at margins of 10%. Q2 about 10% ABB. They moved up to 15, 10, 11, 14. They've clocked in 18.34% in quarter 4. Similarly, for a Siemens, from 10% to 15.3. For a Honeywell, they've stayed steady, but from 16 to about 18%.
Yeah.
Now, the beauty is that the base effect for each of the exit rate is 18, 15, what have you. The base effect is not so much. If you look at the calendar year numbers, for an ABB, for example, if they've done margins of about 15%, 15% and 14% in each of the preceding 3 quarters, and now they've done 18%, and they're saying that there are no one-offs in the margins, which means that if you assume that they will do 18% margins each quarter again, safe assumption, then they're anyways clocking in a 3% margin beat versus the corresponding quarter last year.
And versus pretty much the average over the last several quarters.
Right. And they are showing sales growth. So therefore the PAT growth is higher. You can extrapolate that PAT growth and show some pretty strong PAT numbers for these companies over the course of the next 3 quarters at least.
So therefore EPS growth, so therefore price.
And therefore expensive price earnings multiples can be justified. The other small aspect is that for people who are bullish here, and we were speaking to BofA's Anish Shah last year, wherein he had spoken about this theme. And he had said that if you just look at what happened to the EBITDA of some of these companies back in 2003 to 2008, when Capex cycle came up. And we are not saying that this Capex cycle is similar to last year. If anything, by the way, these companies have a stronger mode this time as opposed to the last time, because it's not a very wide participation. There is green hydrogen and some of the niche areas coming in, wherein ABB has, or a Siemens have an edge over some of the other players, right?
No doubt.
But the point is, the point that Amish was trying to make then was that if you look at the EBITDA for some of these companies between 2003 to 2008, the EBITDA doubled again, and then doubled again. That's the way the EBITDA for some of these companies grows when they are in an upcycle. Now, are we at the end of the upcycle and the margin appreciation? Who knows? At 15%, everybody was saying ABB is done enough. Now they are coming and saying that we have clocked in 18% and there are no one-offs. So who is to know what happens? These guys shy away from really giving very tall claims. But I think the market would love to believe that the performances may continue. And for now, therefore, difficult to see sellers coming.
Yeah.
And that is the point for these stocks.
Okay. One last question, we'll close it. For those that have missed the bus, though.
Difficult.
It's difficult, right?
Difficult. Very difficult to buy companies which are at 75, 80 times. We know what's happened to Asian Paints for the last 3 years, right? The bluest of blue chip stocks hasn't given any returns for the last 3 years. So very difficult for people to come in. But that's the point, that very difficult for short sellers to come in as well, just because of the performances that they are giving. And maybe people may not have bought a Siemens ahead of the results, or even after ABB results. And even they are saying that, oh, we missed out because the stock gained. Siemens gained about 12-15% post results. Quite something.
Absolutely. And on that note, we have to slip into a very quick break. But on the other side, we're going to talk about the FNOQs after what has been a very, very interesting session. I'm sure Agam is going to give you some clearer picture than I would, for sure, about what happened towards the end of yesterday's session and what you need to bear in mind at the start today. So do stay tuned.
Welcome back. This is India Market Open. We're taking stock of the futures and options space at the moment. Turned out to be a very, very interesting expiry and perhaps for call writers, not a great one. but certainly a good one for all those who were long in the markets yesterday, specifically in the last 1 hour of trade. Let's take a look at how things have panned out. As far as the futures are concerned, well, on expected lines, we saw a lot of shorts being covered, indicated by a decline in open interest. It was the last half an hour, 45 minutes, which actually did lead to a sharp rise in the Nifty from day's lows all the way to day's highs. And that has actually led to a lot of call writers running for cover yesterday. Of course, let's not forget that it was also the weekly options expiry. So I reckon that that element had to play. And the markets were looking for a trigger. They found that trigger, and that set off, in fact, a sharp up move. When it comes to the bank Nifty, again, the picture wasn't very different. We saw a little bit of a decline in open interest when it comes to the futures. Coming down to your Nifty options market, what can we expect as we move into the next week? Well, once again, the options market was all over the place across many strikes, considering there was so much choppiness in the Nifty yesterday. But when it comes to your overall open interest distribution picture, at the moment, we're continuing to see a substantial amount of calls and puts being written around the 22,400 strikes. Now, let's also take a look at the June 6th expiry and see how things have changed. Until yesterday, we were only talking about two strikes, two levels. One at the 22,000 mark, where we have the most amount of writing as far as calls and puts are concerned, followed by 22,500, where there is a significant amount of call and put writing. However, now we also have the 23,000 call coming back into action as far as your June 6th expiry is concerned. Of course, we all know June 6th expiry is important because that's the week in which we will have the outcome of the general elections, which means that you will have a lot of bets being placed for that specific week, and we will have increased activity there as well. Well, let's move on and talk about stocks, and we have green across. So longs for Balkrishna Industries, M&M, which announced earnings during market hours, Oberoi Realty, Hindustan Aeronautics, as well as something like an Ipca Laboratories. Hindustan Aeronautics up another 10%. It's a whopping up move at a new life high, and this follows, well, some positive broking notes that came through over the course of the last 2 to 3 days, and we're just continuing to see that build up of an up move there as well. Well, besides that, we're also keeping an eye on stocks which are unwinding, short covering for LIC Housing Finance, IEX, Manappuram Finance, PFC. All in all, it turned out to be a very good day of trade for those who were long in the markets positionally, and a lot of shorts being covered as well. But let's take a look at what our experts have to say and what they make of this market. Well, we have Aditya Arora of Adlatic Research who's joining us on the show. Aditya, good morning. Thanks for joining in. Your view on the benchmarks, the Nifty and the Bank Nifty, what are you doing with them?
Very good morning, Agam. I think the move yesterday was really dramatic from day's low to day's high, and a big spike is what we saw. But that denotes, huge change in volume, which also denotes huge change in trend. So now 22,050 on spot is a very strong support for the market. Until that is not taken out, one must maintain bullish bias or neutral bias in the market. Although FIs continue to maintain high level of short exposure in the market. So trend will turn negative below 22,000 on Nifty. And similarly, we saw similar kind of patterns in Bank Nifty as well, where Bank Nifty shot up from day low to almost day high. Almost 500 point of move over there as well. So 47,200 is the support level for Bank Nifty in spot level. Until that is not broken, one must maintain bullish bias over there. And once 47,000 is broken, one can take short positions over there. Important point to note is that FI is not reducing the short positions. So I expect almost 2,000 point of move in Nifty till election. So one must be prepared for very high volatility and very big moves.
Well, there's no doubt about the fact that one must brace for an event that happens every 5 years in India, of course. But moving on, Aditya, I believe you have two calls from the technology space. Interesting. Can you take us through this one?
Absolutely. Technology has come into limelight after a very long time of underperformance. And one must note that the divergence between NASDAQ and Nifty IT is very huge. So now there could be a catch-up rally in IT stocks. Yesterday we saw a good movement over there. Good patterns have been formed, bullish patterns are there. So my long would be on Infosys. 1460 call could be bought at 19.95. 1480 call could be short at 12.05. Maximum loss potential is 3160 and maximum profit potential is 4840. So it's a bullish strategy. If stock goes up, one who makes this strategy makes money.
So, well, there you have it. Those are two calls coming in from Aditya. Of course, he's spoken about Infi, but let's talk about Tech Mahindra as well. Aditya, can you take us through this one too?
Sure. So Tech Mahindra is also a very good candidate. It showed a rally a few days back, and after a consolidation, it's again starting a fresh leg of rally. So one can buy 1310 call option at 27.40 and can sell 1330 call option at 18.50. Maximum loss potential is 5340 and maximum profit potential is 6660. So it's a bullish strategy. If stock goes up, it would be a profitable strategy.
Okay, so bull call spreads for these IT companies which are on the radar of Aditya. Aditya, taking a moment to thank you for joining us and taking us through your views on the markets and giving us those two option structures on those two large IT companies. With that, it's over to you, Tamanna.
All right, thank you for that, Agam. Kush Bora, founder of kushbora.com, is also joining us. Kush, this is, I think, the chatter since closing yesterday. And as you heard Aditya also talk about what happened yesterday in the afternoon, in the last 1 hour, is the big, topic of discussion and debate. Now, several theories. We're putting it down to, as the initial trigger being the voter turnout announcement by the Election Commission. So that's quelling some fears, etc. And then short covering. Having said that, looking at the way, levels have crossed 22,400 yesterday, how do you expect the Nifty and the Bank Nifty to be positioned today?
Sure. First up, Tamanna, very good morning to you and everyone on the panel. I'm so glad we started with this conversation. We can all figure out, what happened. In fact, what happened is right in front of us, right? I am more curious and concerned about why, this happened. In fact, if you remember the last couple of conversations that we've had, some of the regular data points have been thrown out of the window. Let me take, a few seconds here. Usually how we would read the market is that wherever you have a strong call base or a put base forming, that would eventually turn out to be a support and resistance. For the last month and a half, what at least I've been observing, what I've been sharing, is that wherever a strong call base or a put base is formed, usually that turns out to be the level that is taken out rather easily with such wild moves. Now, just to answer the question that I put out, which is what we know, what happened, we know. Why is the bigger question? I think what's happening is the market from the option selling side is starting to mature now, and there is no easy money left on the table for option writers. So from that perspective, I think, all the viewers and everyone who's listening and, who's a very active option writer, perhaps are seeing some sort of shift in their P&L. Perhaps this would warrant a shift in their strategy also as to how do they go about writing, options. As I said, my bigger concern is that there is no easy money left on the table for option writers. If you're a seasoned professional and you've learned, how to hedge your positions along the way, then perhaps the next couple of weeks might be, a good, option selling, weeks for you. But otherwise, my sincere suggestion, stay out.
Kush, this is the only way to play this market is to hedge yourself. But let's not forget premiums are expensive. We can see how the implied VIX is looking. If an individual wanted to open a naked long on the index, and this is for maybe June 6th expiry, what would you recommend? Would you recommend that takes a brave heart, or do you feel like with everything coming together and in every downside support being found in terms of commentary from the Election Commission, from, of course, what we see in terms of data, do you feel like maybe considering a long trade right now with an option to roll over, of course, may not be too bad on the Nifty and Bank Nifty as well, because we've closed shy of 48,000 yesterday? I mean, tempting trades.
Hi, Samina. Well, I will concur with you 100% there. because the bias in this market is for sure positive. Now the buy on dips has worked, especially if you had the heart to buy the 1,000 point dip, right? So if that's the way to go about it, the only way to play this market is a buy on this. You would rather get stuck on the long side with an eventual hope of your prices coming about, let's say if not in a month, maybe three. But you wouldn't want to get stuck on the short side of this market. So for sure the bias is positive. Every dip that you get should be taken as an opportunity to accumulate. Now that said, going into a big event, the only thing that I would suggest is to have your position sizing in check. Risk management tools and ideas often don't really work, especially if you're going naked long in this market. So it may not really work. But if you've got a limited position sizing, then that perhaps even if things go a little awry, you're still you're still not too concerned about how bad things really went. So stay long in this market. From a near-term perspective, you're looking at a 22,600 as the target on the Nifty, 48,400. But this is just before June 4th. After that, perhaps things will change, or perhaps by then the data would have changed a little, and I could give up or give out fresh targets.
One stock that you and me have extensively talked about in the last 7-8 weeks has been HAL. And I have to ask you again this morning about HAL. It was the second big gain on the Nifty 500. Sharp up move in the last hour of trade. Uncharted territories, would you consider going long on this one today? Or if you missed the boat, you should avoid it for now?
Samina, incidentally, we put out a buy call on HAL in our advisory just 2 days ago with a target of 4,400. Now that's been surpassed. If you see on multiple time frames, this is now hitting overbought territories. Extremely bullish on HAL even from here. My only suggestion, buy on dips. If you get it somewhere close to, and if you're lucky enough to get it anywhere close to 4,400, 4,450 levels again anytime soon, then perhaps it will make for a good risk reward ratio. But if you've got an existing position, continue to hold. You wouldn't want to book out too early. Even yesterday we saw big sharp up move on the back of good volumes. So this momentum could very well continue. But for a fresh entry, you might want to wait for a dip.
All right, Pankaj Pandey also joins in this morning. Pankaj, good morning. Head Research, ICICI Direct. Let's get your take on Vodafone Idea. Let's begin with that, Pankaj. Some of the big numbers that came in yesterday. Now, Vodafone is, I would say, a hope bet. It's one stock, one company where investors have been willing to overlook so many factors because at least they're able to raise funds, at least there is a management trying to push them. So there's a very, sort of conditional acceptance. Now tell me something, that the fact that their losses have widened, would that also be acceptable? How do you think the stock will perform today?
So hi, good morning. Thanks for having me. I think from a number perspective, the numbers are definitely muted, but some of the positives that I have to sort of highlight. One, obviously, is the churn rate has sort of come down. So that is slight positive. And I think overall, see for Vodafone, the key would lie in terms of the kind of 4G run rate they would maintain going forward and the impending launch of 5G. And on top of it, overall, the sense what we are getting is probably we are going to witness tariff hike. I think the quantum of tariff hike is something which is still sort of missing. So I don't see that this quarter will have too much of a bearing on the overall pricing or the way sort of stock behaves. I think largely it is more to do with what kind of subscriber run rate they are able to sort of maintain on the 4G side. And one positive, like I highlighted, churn rate has come down. Otherwise, most of the numbers are weak.
Technically on the charts, Kush, how does Vodafone Idea look? Is it a trade here on the long or short side? Numbers are largely flat, at least in terms of core business. No disappointment, maybe that could be a positive.
I'll just take a few seconds. I particularly enjoyed the line of questioning that Tamanna put out on Vodafone. And that's exactly how it's happening. It's a hope trade. It's an overcrowded trade. Every a few quarters, you get a positive news and the stock, attempts a rebound but just gives away. For me, this is a very clear avoid. I mean, if things were to turn around, if the stock actually showed me a tick above 16, I know it's a bit far, but if it did show me a tick above 16, then perhaps I would consider. But up until then, all rallies might just fizzle out. So for me, it's on a wait and watch list. I'm just stopping shy of calling it an avoid, but it's on a wait and watch list. Above 16, we might consider, but not before that.
No, that's actually the point at the end of the day, Kush, that how do you feel about the company sometimes? So, you're willing to overlook the numbers. Case in point for Biocon maybe as well, if I were to extend that. You've seen losses, nearly the net profit down 48%, but the expectations were even sharper down. How do you like it on the charts, Kush, Biocon?
So see, again, Biocon is also a stock which is, once bitten, twice shy. There has been, an attempt at recovery. But if I look at it at multiple time frames, the negative divergences are starting to play out. The volumes are starting to thin as the stock is going up. So while you might have some sort of, an upswing here or there, it's not a trade that I would want to be in for, a longish time or even on a positional bet for, let's say, a quarter or two. So for me, Biocon is also a wait and watch. If someone is interested, then perhaps it's a good range. 295 on the downside, and on the upside you've got 320. So if you were to play this range, perhaps you could consider. But even otherwise, there are plenty of other stocks in the doing well. So Biocon for me is again a wait and watch candidate at best.
Okay, well, 305 for that one. Let's see how it shapes up in the day today. Pankaj, do you track? Let's talk about Keynes if you track it. Otherwise, I have other stocks. Do you guys track Keynes Technologies?
No, Niraj, we don't track.
Never mind. Okay. Do you track PB Fintech and some of these tech players? Because PB Fintech could be in focus today because of the block deal. What do you do with a PB Fintech or a Zomato or some others if they were to show some dips because of a block deal or results or otherwise?
Niraj, traditionally all these companies have looked very expensive to us, and we have not really been chasing a lot of these stocks. So all these new age companies, we are yet to sort of figure out what kind of valuation one should ascribe, because see, the entire value lies in the future and how one sort of sees it. So which is why we are still we are happy with traditional businesses doing well and having cash flows.
Okay, fair call, and understandably so as well. But viewers, remember, PB Fintech would be in focus today because of the large block deal which comes in at a 6% discount to the closing price yesterday. Kush, good morning. Niraj here. Would love to understand what are the stock recommendations that you're making for the day today.
Hi, Niraj. Good morning. I think it's the first time you're speaking after your trip to America. I did read your, I did, hear your bits about it. Absolutely fab. I hope you could do more of those. So
thank you, Kush.
Yeah. Kush, even we want to go on these trips.
Please apply for leave. Please book the tickets and please fly down to America.
on a lighter note, but yeah, that was on your bucket list. So that was fantastic.
Yeah, as a bucket list ticked off. Yes. Let's see. Maybe our viewers have a bucket list to trade Kush Bora's ideas today. So let's get in those ideas and recommendations for the morning. Kush, what are you recommending?
Just to Tamanna's point, if I were remotely eligible, I would say get in line. But yes, a couple of stocks. Jyoti CNC is on my radar. The stock actually did rather well yesterday, has been doing rather well for some time. There was a dip, but that's been bought into. So Jyoti CNC from a near-term target of 935 and 960 and a stop loss of 895 is one of the recommendations today. The second one is Amara Raja. This entire space has been doing well. Amara Raja also has seen a rebound from its 20-day moving average. Mild resistance at those 1135, 1130 kind of levels, but within that band, we believe that this can be taken out in the near term. So 1155 and 1175 are the targets, and 1115 is where I would place my stop loss.
There are a whole bunch of earnings. Pankaj, the whole bunch of earnings came out yesterday. What is it that you track and you liked that we saw between market closing yesterday and this morning? Anything that stood out for you and that you'd recommend a constructive call on?
So M&M, we have been very constructive for quite a period of time. I think the numbers have been pretty good. I think the Capex announce is quite aggressive, and overall, when you sort of look at the current booking run rate, I think the company is still sort of short of capacity. And I think when you look at the four-wheeler as a pack, where growth is expected to be about muted at 5%, I think SUV as a segment is something which is going to grow in high teens, especially for M&M. So M&M is something which has sort of done well, and we will sort of continue to maintain a buy there. Then I think Caplin Point is another stock which we liked. I think while the traditional markets did not do so well, but the US market continues to sort of do well, and you have multiple launches there. And which is why this is another stock which we have been liking. And I think overall, our sense is that one has to be very selective in terms of stock, because not everything looks great at this point in time, given the fact that a lot of run-up has already happened. We have also liked the HL, though the prices have rallied, but we are quite constructive in case if stock witnesses a correction, because it's at 3 times, order book is nearly 3 times sales. While good positive surprise was on the margin side, top line growth was largely okay. And I think our sense is that it is largely to do with the MRO contributing more. But I think the runway for growth for HL is quite good. Only thing what we would sort of wish for is probably it is available at cheaper multiples, because last time we had a buy. From there on, also the stock has rallied 1,000 rupees.
Crompton Greaves, Pankaj, good numbers on the face of it. Will be an interesting stock to watch today, you think?
So I haven't looked at that number.
Okay. All right. We'll come back and talk more about Crompton Greaves, but first a quick break. As we get into that break, listen in to what the CFO said about the revenue picture.
I'll divide this into 3 buckets. We'll talk about our Crompton ECD business, Crompton Lighting and Butterfly. Overall, Crompton standalone, we delivered a very strong revenue growth of 12%. And I'm also glad to state that after many quarters and years, Crompton as an overall business standalone has delivered double-digit revenue growth, which is pretty heartening. And this is on the back of a Crompton 2.0 strategy that we got launched in July 2023, where we wanted to move the company towards an organization that works on consumer-led innovation, leverages its strength on go-to-market, and have a robust supply chain to ensure that the demand gets catered to. On that basis, today, I'm extremely glad to state that fans as a category, we have sold 2 crores plus fans in last year, making us probably one of the largest player at a global level. Overall, the fans portfolio has grown at about 12%, aided by very strong volume growth, upwards of 15% for the category. A premiumization journey on fans is moving in the right direction. We have added about 300 bips further in terms of our fans portfolio on premium. What used to be 1 in every 5 fans being premium up to last year, today 1 in every 4 fans that we are selling is a premium fan. So that's moving in the right direction and helping us to grow. Within fans, we are also focusing on non-ceiling category, which has been growing at close to 20% for us last year. Pumps, we are a market leader in residential pumps. We wanted to look at categories other than residential to also help us to grow faster and get share. One of the things that we called out is clear focus on agri pumps. And that now consistently is delivering results for us. And in a category that is known for a single-digit growth, our pumps business has grown in strong double-digit revenue.
Right. Welcome back. You're watching India Market Open. We're gearing up for pre-open trade. It's going to be a flat to slightly higher start after the massive U-turn D Street saw in the last round of trade yesterday. Lots of stocks that did exceptionally well, and of course the excitement may continue into today as well. Stocks like Honeywell Automation, PB Fintech, HAL, railway stocks had a good run. Pankaj, do you track any of the railway counters? I mean, Titagarh, case in point, had a good sort of run with earnings. The stock did well. Any of those railway names that you would consider buying into, even though I know some of them look expensive at this stage?
So I'll tell you what we are sort of liking at this point in time is probably the transmission and distribution space. I think something the likes of KEC International or even Kalpataru, because our sense is that that is one segment which hasn't really rallied. When you sort of look at margin profile, that is expected to sort of improve for both these companies overall, and our sense is that order inflows should be good because both of these about 50% kind exposure to railway. But railways,
I think there is a little bit of an audio problem. We'll come right back to you in a minute, but that's those pre-open rates in front of you. That's not how it's going to open, so we'll leave that for a minute to settle. Kush, anything on rail stocks? Titagarh had a good run yesterday. Good chance that some of those railway counters will continue to gain today as well. Anything that you're buying here?
Couple of names. Texrail looks good. The stocks actually rebounded quite smartly. There is a consolidation with a positive bias, so that's on our radar. On the upside, we're looking at 205 and 225 as the next levels, and a strong support zone comes in slightly deep, but at about those 175 odd levels. So Texrail is one stock. Even RailTel, for that matter, has had a good run. We've seen a good recovery on this one in the last couple of days. Just surfaced above the 20 and the 50-day moving average convergence point, which is at 380. So this could extend, the gain. So here, if the level of 410 is taken out, you could see, further momentum, coming on. And from there, 435 is perhaps, a convincing level to watch for.
All right. So Tex Maco is, doing well second day in a row. But Kush, in terms of banks and financials, beaten down yesterday as well, even though the rest of the market was fairly decent. Anything that you would touch right now?
A little selective, although not all of them have done as well. Even yesterday we saw the bulk of the move come from HDFC Bank recovery. But I think one stock that's on our radar and we're watching rather closely is AB Capital. The stocks, taking support at the 20-day moving average, rebounding, perhaps in some sense bucking the trend that the entire the rest of the pack is doing. So AB Capital is on our radar. Very near-term resistance at those 223, 225 levels. But any push above that could stretch the gains to 235 in the near term. And here too, the risk reward ratio is favorable because the support comes in at 215. So AB Capital is on our radar from this phase.
Look at M&M, just in pre-open trade, of course, it's been a couple of minutes, but M&M continuing its upward journey after the closing session yesterday, post numbers, solid set of numbers. Even the brokerage reports are fairly positive on it. Kush, is M&M looking interesting at 2418?
Very, and you would want to consider this trade on two counts. One, if you're a momentum trader, or if you're a positional trader, then on dips. On both these setups, this stock looks fabulous. In the recent past, if you see any kind of dip that has come towards the 20-day moving average, has turned out to be an excellent buying opportunity. Right now, it's a little far from that. The 20-day moving average comes in at 2175. So, if it does dip to those levels, then it's an excellent opportunity. But as I said, even without that, the momentum is strong. The volumes have seen a very interesting pickup on the way up. So I believe that 2500, 2550 is perhaps easily achievable on Mahindra and Mahindra. So from a momentum perspective, also if someone wants to consider, Mahindra and Mahindra does fit that bill.
Just come to think of it, Puneet was telling me yesterday, from amongst all the auto majors who have talking about what will happen in FY25, Maruti, okay, Tata Motors not so upbeat. M&M is coming out and saying that we will grow our EPS by 15 to 18% in FY25 and margins will remain steady. I mean, that's quite a tall statement from an auto major, wherein some of the others are not quite doing that. And maybe that is something that might help the stock, or that is something that has helped the stock already and might continue to do so.
A lot of it that could be in the price, Niraj. After the recent rally, those numbers, the EPS on that is not very compelling. So I think price may not support the commentary.
Yeah, but except for CLSA, for example, most other brokerages have been okay.
No, and I guess you mentioned that Tata Motors not looking so great in terms of outlook. Market has brought it down, or is bringing it down to its feet, all the way down 1,000 rupees on the stock in less than 4 days,
also,
right?
Sorry.
No, I was saying Tata Motors, if you look at what the outlook, in just comparing outlook of what Mahindra and Tata Motors, the street is watching and what they're saying themselves. Tata Motors now, at least the street is seeing a bit of dip on their passenger vehicles, that momentum not really growing. In M&M's case, even tractor or farm equipment is not looking as bleak. You're seeing maybe rural turning around. So in terms of outlook, if you compare the two, M&M has a more positive story going for it right now in terms of FY25 relatively.
Yeah, and you know the small other thing, or rather the big other thing, because autos is such a large piece of theirs, hitherto they've never come out and had have had a full bouquet of a full portfolio of vehicles across points. The 3XO 7.5 lakh rupees, they have spoken about launching 8 or 9 ICE vehicles and 6 EVs over the course of the next 4 years, which means they are actually planning to have a full bouquet of vehicles as opposed to having segments within that. So the plans are ambitious. The 3XO 50, Tushar was telling me 50,000 3XO bookings in 1 hour. And therefore, they've got something going right for them. Let's see if it shows up in the stock even after the 3% up move that we saw yesterday.
Pre-open is indicating to nearly 2% uptick on M&M. Yeah. So it's going to be, may turn out to be another pleasant morning for that. I wouldn't be surprised if the other auto counters also continue that bullish trend. So there you go, M&M 2.5% gain on the stock. Pull up Biocon. Let's look at how the street is looking at Biocon and Vodafone. Those were numbers that Biocon is no reaction. This is largely what the street would be thinking. Vodafone as well doing nothing in early minutes of trade. You will have the smaller counters react, so the likes of Endurance, JK, E-Clark's, Crompton, they will have some reaction to their earnings. But let's quickly go back and take a look at some of the other names that have been seeing some traction. Kush, anything on the Adani pack that is looking good to you? This week's been pretty good for most of the Adani frontline names.
Well, again, we continue to like, the two names, Adani Ports and Adani Power. Both of these have actually consolidated, if you see, while some of the other names from the pack have perhaps, corrected a bit. So Adani Ports continues to, find flavor. From here, we believe 1400, 1425 is the next level to watch for, almost immediately. And, support comes in at 1300, where you've got multiple, averages converging. So perhaps if someone wants to consider, Adani Port would be, one stock from the stable that, we'd consider.
Is the Adani stocks that Kush indicates that he continues to like in trade. Prince Pipes is expected to 6% down take. Honeywell Automation. Kush, anything on the charts on Honeywell? It was had a very good run yesterday, and this, of course, it was 4% low, 8% lower before earnings. Post that, close to the gain of 9%. Very volatile, nevertheless, down 4.5% in pre-open. If you get a flat start on Honeywell, would you consider trading this one? Not just intraday, of course, because I do know we're going into a long weekend as well, but maybe for the foreseeable few weeks.
Well, not really, because this is not typically a trader counter. You would perhaps see these moves, on the back of news, the way the likes that have come out. But otherwise, for me, this is perhaps more of an investment bet. And at the moment, it's extremely stretched on all time frames. So for me, perhaps a dip, maybe a sharper one, close to 50,000, 5,100, 51,000 rather, is when I would consider. At the moment, it's looking extremely stretched.
All right, let's take a look at what the top brokerage notes are saying today. This is a segment we do every morning. Harsh is joining us with that list. Yes, Harsh?
Well, on my list is City on Info Edge actually continues to remain bullish. They've upped their target price from 6,600 odd to 68 50, it gives a solid 17% upside on the stock. Now, just in terms of commentary, the commentary seems to be extremely positive. The margin beat is largely led by the hiring business, which is again a positive. And therefore, where in hiring are they seeing green shoots? The first is with regard to IT hiring. IT hiring trends seem to show some amount of an uptake, and that's the positive that one takes from it. Consultant sector absolutely flat as they see it, and there's a lower there are lower losses in the non-recruitment verticals. That's probably what is aiding margins, is what the management seems to suggest. Basically, it's the lower losses which is causing the margin expansion, and which is the positive. But Q4 billings positive. The JobSpeak index also seems to be quite positive, and overall billings should improve from here on gradually, is what the management seems to be suggesting. Of course, that's overall seems to be a positive outlook going forward. On the back of that, Citi has tweaked its estimates. 6870 per share is the target price, and they've given it a 42 times FY26 EV to EBITDA is what they're extrapolating, and on that basis a 17% upside.
All right, so Info Edge looking interesting in pre-open trade as well. Kush, you like Info Edge?
Well, not particularly. It's consolidating. The bias is mildly negative, and resistance at multiple points, 6100, 6125. So not a very constructive setup just yet, but perhaps if some of these key resistance levels are taken out, then.
Okay. Well, at the end of the pre-open session, the big boy M&M is up about 2.5, so that's good going. The big gains have come in from endurance tech, something that Samina was pointing out on the trade setup and the stocks to watch. That's the biggest gainer on the BSE 500, 8.5%. Some of these
Keynes also, Niraj, the one you pointed out is not.
Keynes is doing well too.
14% from what I can see, but. Yeah, 15%.
Okay.
Wow.
Yeah, one EMS stock has actually delivered well. So actually, Pankaj, any thoughts on any of these stocks which are moving around? So there is Endurance, there is Info Edge, there is Keynes Tech, which is up 14%.
So none of them, Niraj. But what we have been liking is that, we are liking the entire infra as a space. So we have buys on NCC, we have buys on Patel Engineering. We're liking the cement as a pack because that is one segment where, while you don't have triggers for next 1 quarter, but overall sense is that that should sort of keep doing well. We're liking the home building space, something like say Kajaria. And also we have started liking some of the PSU banks further. So both SBI and Bob looks attractive to us. On the pharma side, while we are not liking Biocon, but we are liking Syngene, given the fact that what we are sort of picking across CRAMS players is that the level of inquiries have sort of gone up. So I think this market is quite stock specific, and I think that is going to remain there for some period of time, at least in the result season.
Okay. Pankaj, interesting, Patel Engineering, they've done the QIP as well at a slightly higher rate. Why this one? What is the earnings trajectory?
So, for example, I think our sense is that this is one of the few companies which has got good track record, especially on the hydro side. And our sense is that post-budget, a lot of announcement can happen on that side, because while in renewables we talk only about solar and wind, I think hydro is something which is still Capex heavy and is a segment which is still sort of missing in action. So given the fact that they've got very strong credentials, especially in this segment, and it's a better margin business. So which is why we are liking this stock. NCC we are liking because I think margin profile is expected to remain at 9.5% to 10%. But this is one stock, if somebody does not want LNT to be bought, I think this is one stock which where we feel that can easily deliver high teen kind of a growth with decent multiples. And I think some of the beaten down names like say Heikel looks attractive to us. So we've come up with a buy because I think worst is largely behind us, and going forward, both the segments are looking attractive to us, be it agrochemical or the pharmaceutical as a space, and especially CRAMS there also.
Okay, all right. Just a minute and a half to go. Kush, very quick last call. One last call before market open this Friday.
Aegis Networks.
Okay.
Or a short?
It's in cash. The only way to go is long. So yeah, it's a multi-bagger story. We believe we've been recommending it from 400 odd levels, and we are still bullish. So Tejas Network, from a momentum perspective or an investment perspective, you could consider.
Wow. Well, Tejas Networks, it is 1.5%. And just actually, Kush, the stock of the morning on the large cap space could well be M&M, maybe 20 seconds. But what are the levels to keep in mind after for somebody who wants to go long after open?
2500, 2550 are the targets that you should look at, and on the downside, yesterday's close of 2370 is what you should have as your stop loss.
Okay. Stay on, gentlemen. We'll just take in opening thoughts post-market open, but suffice to say that we will start off reasonably okay. A lot of stocks are actually giving some pretty strong reactions to either the news flow or the earnings. And we'll try to talk about some of those. And of course, keep an eye out on the index because of the kind of move that we had yesterday. Very difficult to think of short sellers being able to take a convincing bet and go short on the index today because we have an operating day tomorrow while the global markets would be shut. But we're starting off flattish. Actually, yeah, almost flattish. The banks also had a decent outing yesterday. Let's see if banks are doing okay. No, not quite. IT was the big mover in trade yesterday on the upside. IT is lying flat too. There's no change. Mid caps and small caps, let's pull them up. Remember, the small caps underperformed the large caps because of the ferocity of the up move yesterday in the last 1 hour. Today, mid caps are starting off okay. Small caps, 0.5%, so not bad. The start is looking pretty positive. Let's get the heat map up on the screen. Show you what's moving and what's not. More red than green. Adani Ports down about 1.5%, presumably on the Norges Bank report or Norway Pension Fund Act. Cipla is down about 1%. Sun Pharma is down. Axis Bank is down. HDFC Life is down. So more red than green, but a few losers. And even this ones, I mean, not really very large cuts at all on any of those. What's doing well? There is a large gain on M&M and therefore deserves mention. Another 3% after the 3% up move yesterday. M&M is doing today what Bharti Airtel did yesterday. Closed at the day highs the previous day and then carried on the gains. Tata Motors up about 1%. Grasim and Tata Steel up about 1%. ONGC, Maruti, Autos making a bit of a comeback, if you will, but it's largely sluggish. Frankly, the one, and as we say, Axis Bank is now the top loser. Adani Port is not even there. So the point is there is only, I mean, losers, there are more, yes, and now the gainers are coming in. But the one stock worth talking about really is what Mahindra & Mahindra is doing, 4% higher. It's eclipsed Kush's targets. It'll be interesting to talk to him. What does one do now? Because at 4%, it's doing really well for itself.
What an up move. And just a quick programming shout out here. 9:40, you will hear Anish Shah's conversation with NDTV Profit on what is making M&M tick. That's really the story this morning. Everything else is quite tepid apart from a Tata Motors. But let's look at what's happening in the broader indices. And the set of stocks I'm talking about is largely on the back of results impact. So we'll see if there's any action there. Vodafone Idea is the first one. Losses have widened, but the outlook is not that negative, at least as far as brokerages are concerned. A host of them saying that things might start looking up for Vodafone Idea, and the stock's doing okay, about 1% up. Biocon, again, 48% down on net profit, but exceptional items there, API impact, etc. The stock actually doing fairly well. Remember, the net profit, downtick expectations were upward of 50%. So at 48% down, Biocon maybe is relatively better than street expectations. That's 1.5%. Keynes Tech is really the big one this morning, and something we pointed out in the trade setup as well. 12% higher on the back of numbers. Info Edge numbers came out yesterday. Stock was doing okay. Citi has upped the target. Stock up 5% this morning. So sharp moves over there. I'll just look at Crompton, Triveni Turbine, Prince Pipes, Endurance Tech. All of them, I would say, in terms of just what results are showing. Look at Crompton's move, 9.5% up, and in line on all factors. Highest ever quarterly revenues for Triveni. That's done well as well. Prince Pipes was disappointing, as we had mentioned in our opening setup, and that stock actually has recovered from where it first hit in pre-open trade as well, but about 2% down. Let's just talk about Endurance Tech as the other one that has seen some impact. So it's all about numbers in some of these stocks, but broadly the market not moving on very high volumes, at least right at the get-go.
No surprises there, right, Tamanna? After that very sharp rally we saw yesterday, we highlighted how we've got a long weekend ahead. You've got polling in Mumbai, which also means the markets are going to see a holiday, uncertainty in terms of global cues. All that will keep traders a little more cautious than expected. And let's not forget, we've had a good run. Between Monday to today, the markets have actually pulled together quite well. Comments from various authorities has also helped the street quite significantly. 22,400 is where you've seen a lot of activity. The Bank Nifty is taking a little bit of a downtake in trade, and the Nifty as well, respecting 22,300 deeply. But of course, 22,400 becomes a tough number to sustain at. In terms of stocks, Keynes Technology is the biggest gainer. You've got a 12% move on that. Crompton Greaves, I don't know what the street is so excited about. The numbers were good, but they were not great. But the stock is up 10%, and that's what's eye-catching, to say the least. Of course, getting a thumbs up on that. Endurance Tech, Tamanna has already mentioned. Titagarh is another one, 7%. Info Edge, these are all numbers reactions, right? Info Edge is up 7%. Bad numbers from JK Paper, where the stock goes up 4%. I'm not sure why. You've also got a few other ones like your shipbuilders. So Garden Reach, which had a big order. Mazgaon Dow, Cochin Shipyard, all trading with a very clear positive bias. In terms of a weak set of numbers, you had Ratnamani, Avalon Tech, E-Clarks, which reported weak numbers, but the stocks, Ratnamani fortunately is reacting in line with its earnings. E-Clarks also down 4%. And you've also got JK Paper that's doing a positive reaction to weak numbers. You've got Garden Reach that looks good. You've got Cochin Shipyard, Mazgaon Docks amongst the other gainers. Let's look at HAL after that 10% up move yesterday. Let's see if the buying is continuing into today's day of trade. No guesses there. It's slightly lower, consolidating after a sharp up move. While we are at it, let's take a look at BDL. That's the other counter that usually moves in tandem with HAL every time the defense story plays out. 2075 on BDL is what we have. You've also got Dixon Tech, 4% was a stock to watch out for this morning. You've got HPL, Jindal SAW, which saw a deal happen. That one is up about 3%. All your rail stocks are looking good. So not just Titagarh, but Rail Vikas Nigam also seeing marginal gains this morning. On the sell side, E-Clarks, we talked about. Riddington on back of numbers is down 3%. Honeywell Automation, after those very wild swings yesterday, is down about 1.5%. Container Corporation, weak numbers, stocks down 3%. Zenza Tech is down 2%. Prince Pipes, weak numbers, down 2%. Ratnamani, weak numbers, down 2%. PB Fintech, down about 1% post earnings. Adani Green, down about 1%. Adani Ports also trading muted this morning. But I think it's an opening in line with what we're expecting. Kush, you want to comment on this one? Have you spotted anything in the first 5 minutes? I think it's cautious, at least this morning. I'm not sure what's going to happen in the second half. But for now, at least, it seems like traders are on the sidelines. 22,400 is a tough level to take out conclusively.
No, I agree, on that front. Plus, I think the magic that we spoke of where the call and the put highest bases are taken out is perhaps a magic left for the expiry day. Otherwise, you would see some resistances come in. You're right, 22,400 and 22,500 both have witnessed quite a bit of, base, and even in the first 7 minutes, some aggressive writing. So perhaps that could play out for the day. But we do believe that, any kind of tip that you get closer to 22,200, 22,250 would be a buying opportunity. Bank Nifty, 48,000, 48,400 is the level to watch for. So here too, any dip should be used as a buying opportunity, if not for the day, at least positionally.
All right. Kush, thank you so much for joining us today. Just want to get a quick call from Pankaj on M&M before, we let you go. I think no matter what else people are doing in the market, they've jumped into their Scorpios and driven upwards, because look at that stock. I just want to pull up M&M, and nearly 7% up now at 25.35. I mean, what a show. Tata Motors also doing fairly well. Pankaj, would you bet on auto? Nifty Auto, by the way, has hit its lifetime high. Your take now after this run up on an M&M, Tata Motors, and let's put in a Maruti as well for comparison.
So while Maruti is expected to witness a single-digit kind of a growth, we have a target of 14,000 on Maruti. But I think M&M, so we are about to release our report, but we are constructively looking at 20% kind of an upside, upwards of 22% kind of an upside from yesterday's close. And I think Tata Motors, while overall sense is that the CV business or the PV business is not going to do much or probably consolidate. But I think any kind of a price dip is attractive to us because company is really walking the talk in terms of debt reduction or the JLR as a portfolio is also sort of doing well. So we are liking both Tata Motors and M&M for different reasons. But I think Maruti, our sense is largely sort of priced.
Okay. Thanks, Pankaj Pandey, for joining in today and giving us your thoughts. Really appreciate your time.
Thank you so much.
Now it's time for the election trade, and we've got a very special conversation coming in just moments from now on the math. But there's also this importance of attaching what equity markets could do as a result of whatever happens out there. Let's try and get in the markets perspective going first, and then and get in Rahul Arora, CEO of Nirmal Bang Institutional Equities, on the show. Rahul, good having you. Thanks so much for taking the time out and being with us. Lovely talking to you as always. Is there a sense, Rahul, that clients are a bit are sitting on the sidelines as they await the election verdict, or do you think people are sanguine about the prospects of the markets before June 4th as well?
So good morning, Niraj, and thank you for having me on the show. So I think, it's been an interesting 2 weeks from a market perspective, because I think if you looked at about what was happening about 10 days back, there was a bit of trepidation, that was floating around in the market with respect to an anti-market sort of outcome, if I can call it that. But I think, ever since one political commentator came out and said that, the current establishment is actually gaining seats in South India, that was actually a trigger point for the markets to start rallying from there. So obviously positions are a little light going in. I know we're about 400 points or a little less than that away from an all-time high on the Nifty. But I think if the market gets what it wants, I do not rule out the possibility of June seeing, an incremental 5-10% on the Nifty. So it's very possible that, if the current establishment, which is what the market is expecting, gets an absolute majority, you could be looking at a Nifty of, say, maybe 24,000 as early, by the end of this current month. If that verdict doesn't come through, then obviously the downside opens up to a very large extent. But I think at this point in time, people are approaching the event light. Rather, probably when we speak to our institutional clients, ready to take positions post the event rather than pre the event.
24,000. Hi, Tamanna here. Good morning. 24,000 by end of May or June 4th, post June 4th?
Post June 4th, Tamanna. I think so. We've already seen a remarkable rally, over the last few months. Obviously, it's gone through its bit of time corrections, but I think by the end of May would be a bit of a stretch. I think if the current establishment were to get the absolute majority, I think that could be a reasonable target by the end of June.
Okay. So the last time we spoke about elections, Rahul, which was a while back, to be fair, it was still a non-event, and not just you. For most of the market, elections were just one sort of thing that was going to pass by. Results were in the bag, expected, etc., all priced in. What has really changed? Has anything really changed? I'm just trying to understand where all that nervousness has come from. There's so much lack of clarity on what the market is thinking. I wanted to get your perspective on this.
So I think, Tamanna, if you speak to anyone from the market, they'll be clueless to answer this. But, I think it is still a non-event from that perspective, that if the current establishment were to come back and resume office, all you'll get is policy continuity. So I think that is what the market will like. And I think that's the way the market was thinking about this event 15 days back. And that's why I think, to use your words, it was seemingly a non-event because, if I was to just quote a line in Hindi, it was like, ye to hona hi hai. Obviously, once this trepidation started, and I don't know from where it did, and that's where a little bit of nervousness came in. Add to that, Tamanna, I think if you look at the earnings season, by and large, there have been more downgrades than there have been upgrades. It's not been a consistent upgrade cycle. I think the best piece of news that we have got from an economic standpoint is the inflation numbers in India and the US, which has now, reignited the fact that whether rate cuts can happen a little bit sooner than was earlier anticipated. And I think you've seen the Dow respond, and of course the Indian markets have sort of followed suit. So I still don't think this is a structurally life-altering event from an equity market standpoint, because once the event is out of the way, you do get back to macro fundamentals, you do get back to earnings. I think, stock prices don't chase election results, they chase earnings, and therefore we look at price to earnings and EV to EBITDA. But I think the only risk, Tamanna, is that the market does not get the verdict that it is anticipating. And then that opens up a downside risk. If it does get the verdict, then from that perspective, like I said, I don't see this as a 2009 kind of event where you're going to get two upper circuits or anything like that. I just think it's been a steady up move for the market. And that's why I said, I think, a 10% move post a favorable market anticipated outcome could not be ruled out.
Rahul, hi, it's Samina joining in as well. And how critical do you think will global cues be in this mix? FPI holdings stand at a decadal low. Do you feel that investors locally largely will have an opportunity to add allocations, or do you feel like the move will be so swift if the outcome is better than expected or in line with expectation? And if you're on the sideline, you might miss out. I'm truly trying to understand, what does a short-term to medium-term investor do? We all know the long-term story of India is intact. Most events are insignificant. Very rarely do we know our entry points, or remember our entry points. But if I'm trading this market from a 3 to 6 month perspective, do you think an opportunity will come, or do you think it's going to be swift and hence it's best to be fully invested?
Good morning, Samina. So I think since your question was more on the global market, Samina, I think the next 6 months are going to be extremely crucial, because I think the world goes into the single most important event in the next 6 months, which is the US election. And I think people are going to be watching it like a hawk. You're already seeing protectionist noises coming out of the US. I think this is just ahead of the Biden versus Trump debate, which is probably going to be two of the most widely watched events globally, when those events take place. And now you have the Democratic Party talking about imposing sanctions on China. So the rhetoric is starting. I think from a US standpoint, Samina, it has been the easiest trade to take, because you've seen the yields hovering at north of 5% for quite some time, and that's a very good return to make in the US market. So if you do have a situation where rates come off and the yields don't look as attractive, you could see incremental flows coming into markets like China and India for sure. That's not to say that Indian markets are inexpensive. I don't think they'll be buying valuations. I think they'll be buying growth. And unfortunately, because of the domestic liquidity in India, the size of the mutual fund industry, valuations are looking fairly steep even at this point in time. So if you have something that's growing at 15% in India, people are happy to give a 45, 50, even 55 times multiple. But I think globally it's going to be a bit volatile. Once the debates actually start in June going up to November, we'll also have to see how the two wars pan out, in the Middle East and what's happening with Russia, Ukraine, because this could be a very sensitive time in the run-up to US elections. And I'd keep a close eye on the way crude also behaves, because, that's a very important determinant for margin expansion in India. So I think once the Indian election results are out of the way, I think you could still brace for some amount of volatility globally, with my particular focus on the US yields and crude.
Rahul, please stay on with us. We have a very interesting speaker joining in on the election trade, and from the other perspective, I would say the political perspective as well, because at the end of the day, that's the question, right? Are we going to get 400 par or not? That's the expectation of the street. So I want to welcome Amitabh Tiwari, political strategist, to the conversation today. Amitabh, hi, good morning. Now, the market has been looking at the 400 plus figure, even though actually to run a government you need 273. But, interestingly, this is a figure which has come back in the political narrative in the last 1 week. It's re-emerged in election rallies, etc. Now, the question is, how is 400 possible? What is that path to 400 looking like, and is it feasible? And you have a very interesting theory. So let's start with you sharing that with us.
Yeah, so this 400 number is not a mere slogan, because there is some working behind these numbers, and there is some method behind this madness, and there has been some detailed working on it perhaps. And this is what I called the RAM strategy, which is regain, attain and maintain, is the 3-tier strategy which BJP has formulated to arrive at this mission 400 number. Whether it's feasible, possible or not, we'll have to wait for 4th of June to see. Now, this 3-pillar strategy is regain, attain and maintain. So do we start with regain or?
Yes. Let's start. Let's start with what is regain, attain, and maintain.
Yeah. So regain. So if you see regain, BJP won 282 seats in 2014. It lost 35 of these seats in 2019. Of these 35, around 9 seats were reallocated to allies because you had JDU joining in Bihar, so it had to leave some seats. So that makes it 26, 35 minus 9. So there are 26 seats which it had won in 2014 but lost in 2019. So these are the seats which the party has strategized or wishes to regain. So this is the tier 1 or pillar 1 of the RAM strategy, which is regain.
What about attain and maintain?
Yeah. So attain is gaining. So attain has 2 aspects to it. One is the BJP was runner-up on 72 seats in 2019. On 39 of these seats, the victory margin was less than 10%. So 10% margin means that a 5% swing is required to turn these seats. -5 from the winner and 5% towards BJP. So if there is a 5% swing in favor of the BJP could win 39 of those seats. And 18 of these seats are common with the regain category. So there are 21 seats which BJP could win with a 5% swing in its favor, where it was runner-up in 2019. And then, of course, the second part of the attain strategy is that it has added allies in the south of India like the TDP and the JDS, and they are contesting on some 22 odd seats, whereas in north, Jayant Chaudhary's RLD is contesting on 2 seats. SBSP also is a new ally which is contesting on 2 seats. So the attain strategy is to win seats where the party was runner-up and help allies also win seats where they have entered into new partnerships, basically in the south of India.
Maintain is the tough one, Amitabh, because as per your maintain theory, the BJP has to have a 100% strike rate in all the seats they won in 2019. And that's the uphill task, isn't it?
Correct. So maintain is the most important or key aspect of this strategy. So it requires to maintain victory or ensure victory in these 303 seats where it had won in 2009. Interestingly, it won 224 seats with a vote share of more than 50%. So that's a huge margin on those seats. And almost 150 of those victories were against the Congress party. That gives some sort of a psychological edge to the BJP because of a better strike rate against the Congress party vis-a-vis the regional allies or the regional parties. And then the allies also need to maintain, because the allies also won around 44, 45 seats, largely in Bihar, Maharashtra, etc. And there, the allies would also need to have a strike rate of 2/3, which is 67%. And this is the most important or key element of this Prabhu Ram strategy, which is regain, attain, and maintain.
All right. So 400 plus can happen. It's back on the table in terms of a political narrative. Rahul, just to wrap up, since you've heard that number breakdown, and that's the number that the market is talking about, how important does it become from a market perspective?
So I think, Tamanna, if I'm a Formula One fan, and typically, Michael Schumacher once famously said that, it doesn't matter if you win a race by a second or a minute. What's important is that you win the race. And I think my esteemed co-panelist, Mr. Tiwari, is probably more qualified to talk about the seats and things like that. But I think it's a purely academic discussion. I think if the BJP wins 275 seats or 400 seats, I don't think the market is going to care too much. All they want, the anticipation is that the market believes that it's going to be an absolute majority. So there's only room for disappointment if that doesn't happen. I think what that eventual number lands up. I think the biggest thing, Tamanna, from our standpoint, and we are not really political pundits here, is for policy continuity and growth, which if India can probably over the next 5 years, under whichever form or formation of government that comes, if we can grow at 7% for the next 5 years, we're home. And if you remember, Tamanna, when the Nifty was at, I think, about 20,000 a few months back when we spoke, I had said that if the Indian economy was able to grow at 7% for the next 5 years, the Nifty will double by 2029. And I think, whichever formation that the government takes, I think that should be the priority. And like I said, I don't think, the absolute arithmetic would, people would matter too much if they want one particular party. Yeah, I mean, we'll know on, I'm sure you guys will be doing an exit poll show. We'll be watching that on June 1st. And then, of course, the final results on the 4th of June as well.
Yep, most certainly. Gentlemen, thanks so much for taking the time out and being with us on this show. Really appreciate both of your times. Time for a quick break. Up next, Anish Shah, Group CEO of M&M. On most line items, Mahindra & Mahindra's numbers beat Bloomberg estimates, and therefore the stock had done so well in the run-up to the results and post the results as well. The questions to the management are about not just what's happened in the quarter gone by, but a lot of announcements they've made in the investor call as well. Dr. Anish Shah joins in to speak about all of that and more. Dr. Shah, great having you. Thanks for taking the time out and congratulations on what appeared to be a very strong quarter. Did it go largely as per what you estimated, not just the quarter but the year as well?
Thanks, Niraj. It's great being with you. Yes, things have gone, in fact, much better than we had planned for the quarter and for the year. There were a number of challenges we faced, but very proud of the team. They've really stood up and delivered everything we said and more.
I'm going to start with maybe 4 or 5 auto questions, then go on to the console piece as well. But when I look at the volumes for the auto business, decent numbers out there. Maybe, I think you alluded this in the call as well, that 27% volume growth is no mean feat, but maybe slightly lower because you were waiting for the 300 to get over, 300 to get over. Now, do you sense a return to normalcy in Q1, especially with the kind of response that 3XO has gotten?
We do sense further growth for us on that, Niraj. 27% growth in an auto industry is very, very strong. And with the 3XO coming in and the bookings, what we've seen, we will continue to see growth. Now, remember that the base for us for F24 is much higher. And what we have committed to is a mid-teens to a high-teens growth in F25, which again is probably 2x the growth that the auto industry, or maybe more than that, the auto industry will see. And we do expect to be able to maintain that growth over the industry, and therefore are confident going into this new year.
Okay, 2 questions on the 3XO as well. Primarily because you've also alluded in the larger vehicles that you don't like such a high waiting period. Now my question is, capacity 8,000-9,000 vehicles, you got bookings in the first 1 hour of 50,000 odd vehicles. So how do you ramp up to meet these kind of demand for 3XO in particular? Part 2 of my question. You haven't spoken about this. I don't know if I should ask this to you, but you've kind of done the unthinkable on the pricing on the 3XO. And you've spoken about a lot of new launches in the ICE side as well, more than the EV side too. Are you looking at even a more competitive price than the 3XO that you've done in the next 12 to 18 months for the newer vehicles? Any one of them?
So on the first part, Niraj, we have capacity for the 3XO. We've already manufactured about 10,000 plus vehicles. And by the time we start delivering on the 26th of this month, we'll have manufactured a few more as well. Our capacity right now is 9,000, but what we also have said in the past is with a little more, with actually a marginal investment and fairly quick time, we should be able to get to 10,500. So a combination of the vehicles that we will have before the booking starts or before the delivery start and what we can then manufacture per month, I think we should be able to move through the bookings at a much faster pace than we could for the XUV 700 bookings, for example, because that was also a little constricted by COVID and we couldn't expand capacity fast enough. So we feel that we should be able to handle this well and be able to manage very meaningful wait times, be able to deliver cars to the customer quickly. And that's been our focus. We want to bring down the booking timeline, and that's what we've been able to do in this space. And then your second question, with regard to price points and vehicles in the next 12 to 18 months, I will seek your indulgence to say we will reveal it at that point in time. Right now, the next big focus is on the 5.R for us, and then post that, the exciting range of born electric vehicles that we will launch.
Yeah. Okay, fair call. I understand that. But I have to ask this to you. 15 vehicles over the next 6 years. That's essentially making M&M present, I would presume, across the value chain, not something that you've done before, a very large car portfolio. So what's the strategy here, and does that cover almost all the price points that you would want to be present in both the ICE and the EV portfolio?
So on that, Niraj, first clarification is that we will continue to stay in SUVs. We're not going to go beyond SUVs.
Okay.
What you see in that portfolio also is a range of vehicles that will meet the needs of different segments and different consumers who want SUVs. For example, our born electric vehicles will start with 6 SUVs, and each of them are distinctive in their own way. And then as we go forward, we will expand our ICE portfolio as well. Some of it is also vehicles that could be tailored for global markets in certain ways. And that's what will help us build a very strong and robust portfolio that essentially plays upon the strengths that we've been able to show across multiple launches in the past 3 years.
Okay. Okay. Thanks for that clarification as well. The other aspect is just breaking it into two. EV investments of 12,000 crores, if I'm not wrong. What are the timelines? How do you fund these? Because if I just did the math of what you say or what you've done thus far on the fundraise and what you might do, it still suggests about 75% of that 12,000 crores to be done by you. So I would love to know how you think about this.
So Niraj, what we're thinking is that in fact the 100% of 12,000 crores will be from us.
Okay.
What we have gotten externally is 1,200 crores from BII. Temasek has invested 900, or rather, Temasek has invested 300 and will be investing a further 900 per the timeline we had set with them. So that's 2,400 crores that will come in from both of these investors. In addition to that, BII had contemplated investing another 725 crores, and we're going to mutually decide over the next 6-7 months whether that's something that they would want to do, whether it's something that we would need. But essentially, the 12,000 crores is from M&M. In addition, the 2,400 crores that's been committed from both of the investors we brought in. And beyond the 12,000 crores in ICE, in EV, we also have committed to 14,000 crores in ICE. So it's a total of 26,000 crores of Capex from an auto standpoint. And over the next 3 years, all of this is going to be self-funded by cash flows generated in the auto business. And which is the reason why we're not looking at external investors beyond what we have right now.
Okay, not for the fundraise, not for the valuation, no external investors, I presume. That's, at least as of now, that's the standpoint.
That's correct, because we believe we've got all the funding we need, and we will be able to demonstrate a much higher valuation in a 3-year time frame as we get a range of electric vehicles on the roads and be able to meet the thresholds that we've promised in terms of conversion of ICE to electric in our portfolio as well.
Okay. Since it's the first interview of the new year, if you will, new financial year, I would love to not just restrict it to autos, though I've gotten enough about autos. Would just want to dwell a bit more on the others as well. Now, my colleague Puneet was telling me that since the time you've come at the helm, M&M, the auto business has doubled revenues, debt has gone down 75%, PAT has doubled in the last 2 years alone. And if I look at the console numbers as well, it's been a very impressive rate. So it's kind of a new M&M. Anand Mahindra kind of referred to it in one of the tweets as well. I would love to know how you think about the next 3-year plan, because I'm looking at the last 3 years and what you've done, and therefore I'm restricting it to 3 years. You can extend it to 5 years as well, or just talk about the year at large.
So on that, Niraj, I would actually say that M&M has delivered very well in the past as well. And if we look at the time frame from 2002 till 2018, M&M was the best performing stock in the Nifty for 17 years. And this is something I do want to highlight, because yes, a lot of people tell me that this is a new M&M, but I would like to point out that this is in our DNA. We have created a lot of value from the past. And that's something we've been able to replicate in many ways, because from April 2nd, 2020, which is when I got on the board and into a transition into this role, our stock has gone up at least 8 times, probably a little more after what we see today. So it's part of who we are at M&M. Our focus is value creation, and the plan that we have for the next 3 years also focuses on essentially strong execution. Our approach is do less, but whatever we do it really well, and thereby be able to create value for our shareholders.
And clearly, auto will not be the only thing out there, because if I pick up a couple of pieces, like for example, what Mohit did with the statement at Tech Mahindra's end of the year announcements. But just wondering, it's not an easy road out there, right? Tech in particular, let's talk about that for a moment. We know that the industry is going through a period wherein customer spends or discretionary spends may not necessarily be the best. How does one beat what's happening in the industry and try and create what seems to be unthinkable right now?
I think it comes back to clarity on where we play, how we play, what is the value add we have, and therefore what is our right to win with our consumers or our customers in the Tech Mahindra's case. And we've been able to demonstrate that across multiple businesses in the group. TechM has had various challenges, and we've got a new team in place in TechM. They're very focused on very strong delivery right now and being able to get the margins up to the levels of our peers, which is what we were lagging in the past. We've got the strengths from TechM of the past, which is a very strong customer focus and a business in many segments of the market that has been built very strongly. So I think leveraging those trends, addressing some of those weaknesses is what's going to help TechM actually get back on track and perform much better. That was laid out by the new CEO, Mohit Joshi, just a couple of weeks ago, and very well received by investors and analysts as well. So we feel pretty good about the path we are on, the leadership that we have there, and the ability to deliver. It is going to be a 2 to 3 year turnaround. It's not going to happen overnight. And that's something we've said of Mahindra Finance as well. And Mahindra Finance is well on its path in terms of that turnaround also.
Okay. What a few people have told me that they need slight more clarity on, and maybe you have provided, but people might have missed it. I have missed it too. Is 2 pieces: M&M Defense and aerospace, particularly the aerostructure business. Would love some clarity here. You've spoken about it a bit, I believe, on the investor call, but would love to hear from you about how do you think about these 2 over, say, 12 months or 36 months.
So both are very small businesses and both are very different. In defense, we are very careful because we want to play only in very specific areas that are transportation and security related. From a value standpoint, we do not want to get into anything that is what we call on the offensive part of defense. That includes ammunition or any other things with related to that. So in the transportation and security areas, we've been doing a lot with armored vehicles, with security systems for defense, with the ALSV that is being supplied to the Indian Army, and we're very well positioned there today. That's a business that has a lot of strengths along with our trucks and buses division. Will benefit trucks and buses as well as the manufacturing and procurement strengths we have in auto overall will benefit our defense business as well. So this is a business where we will play in a very select manner, but there again, in areas that we play, we will deliver very high quality products at a very compelling price point for the Indian defense and be able to grow that business well. Aerostructures is literally a very long-term business. It takes time to build it because every new part that is built takes 1 to 2 years for getting all the specs right, ensuring the quality is right before we can deliver it. We have graduated to become tier 1 suppliers for the large aerospace companies around the world, and we've been positioned very well in their supplier ecosystem because of the quality we've been able to deliver and the timeliness we've been able to deliver it with. And that is creating a much greater momentum for this business. But this is one, again, that I would look at as a long-term business. It is not going to multiply overnight, and one where we've got a very strong DNA in having built it, and that will help us grow this business successfully over the next decade.
Okay, enough clarity, and thank you for that. I just have one final question. I've done 14 minutes, just one final question. In terms of numbers or the guidance that you gave, and again, correct me if I'm wrong, but 15 to 20% EPS growth, 18% ROE for FY25. Did I miss the revenue growth number, or you do not want to lay it out right now?
That, Niraj, we haven't laid out because the guidance that we've given for both ROE and EPS is consistent with what we've said over the last 3 years as well. That is a target we have internally, that across the group we need to maintain 18% ROE and we need to deliver at least a 15 to 20% EPS growth on an annual basis. As I mentioned to our analysts just this evening, over the last 4 years we've achieved an 84% annualized EPS growth. And what I did tell them was that does not mean that next year's target is 84% as well. So we stay with the 15 to 20% target and we strive to over-deliver.
Well, you're certainly doing that with panache, Dr. Shah. Keep that up. Thanks so much for speaking to us, and all the best for yet another successful year ahead.
Thank you so much.
Yep, the pleasure is ours, and viewers, thanks for tuning into this conversation.